Hello, students. In this session, we are going to see what is bank, introduction to banking. First, we will proceed with meaning of banking. A bank is the financial institution which accepts deposits, pays interest on predefined rate of interest, and clears checks of its customers, makes loans to various people, including investors, public, and small saving people, and very often acts as an intermediary in financial transaction. The bank also provides the other important financial services to its customers. So it is called as the very basic meaning of bank. What is this concept of bank? A bank is the financial institution to receive deposits and make loans with a license. It is actually the license given by the autonomous bodies such as the central bank of the respective country. The bank may also deliver the financial services such as wealth management, currency exchange, and safe deposit boxes. There are several different kinds of banks, which includes retail banking, commercial or corporate banking, investment banking, and the rural banking, especially for providing the agricultural credits to the farmers. In most countries, the banks are regulated by the national government or the central bank of the respective nation. If we take an example of India, the Reserve Bank of India is the autonomous body to control and govern all the banking sectors in India. The banks are very creation part of the economy because they provide pivotal services for both customers and business units. As the financial service providers would give the people a safe place to store their cash and valuable things there, including gold, diamonds, and other valuable ornaments in the banks. Through a wide variety of account types, such as savings account and certificate of deposit, the people can conduct routine banking transactions like the depositing of money, withdrawal of money, and payments of bills for their utilities. We can also save money and earn interest on the investment, such as the recurring deposits, term deposits, and fixed deposits in the bank. Banking can be defined as a business activity of accepting and safeguarding the public money, either owned by individuals or by business units, and then lending out this particular inward money by the bank in order to earn the profit through interest payments received from the borrowers. The next, we'll move on to the understanding of banking. The banking can be defined as the business activity of rendering and accepting and also protecting or safeguarding the people money from the individuals or corporates or from the business units. And as we told in the previous discussion also, that accumulated money from the public, which was received in terms of deposits, can be floated into the market in terms of loans in order to operate economic activities such as profit making by the bank, or at least they need to cover their operating cost of the banks. So this is the basic fundamental idea about bank and banking operations. Now we are going to see what is the evolution of the bank over a period of time. We are going to discuss in two different phases. One is the pre-independence phase and the post-independent phase. In the first phase, during the pre-independence period, this phase is considered by the occurrence of a number of banks in India. About 600 banks were there in India. The system was started with the foundation of Bank of Hindustan in the capital, Calcutta, in 1770. The bank was ceased its operations in the year 1832. The Post Bank of Hindustan, and after the Hindustan Bank, in many other banks evolved, such as General Bank of India between 1786 to 1791, and Oudh Commercial Bank 1881 to 1958. But they could not able to sustain and continue their business operations for a very long period. The Oudh Bank, the Oudh Commercial Bank, was the first commercial bank which was introduced in India. Few banks in the 19th century continue to operate even now and establishing themselves as an institution of excellence in the banking sector. The best example is the Allahabad Bank. It was established in the year 1865, and Punjab National Bank was established in the year 1894. Also, some of the banks such as Bank of Bengal, which was established in 1806, Bank of Bombay, which is established in 1840, Bank of Madras, which is established in 1843, were merged into one entity. The new body was called the Imperial Bank of India, which was later renamed as the State Bank of India. And even now we are having the services of State Bank of India, which is owned by the government unit. In the year 1935, the Reserve Bank of India was commissioned upon the recommendations of the Hilton Young Commission. During this phase, due to the failure of the majority of the small-sized banks, the confidence of the public was low, and people continued to engage with money lenders and unorganized players who is providing the local money lending activities. And the second phase is the after independence phase, which was 1947 to 1991. One of the major features of this period was the nationalization of the bank, which was happened. The bank mainly catered to large industries, critical sectors such as agriculture, small-scale industries, export industries, and the tiny industries. Home-based industries were lagging. The money lenders exploited in a very massive way because they are charged a very, very high amount of interest. Thus, in the year 1949, the Reserve Bank of India was nationalized. In 2 decades, 14 commercial banks were nationalized in July 1969 during the reign of Srimati Indira Gandhi. In 1975, based on the endorsement of the Narasimhan Committee, the RRBs, regional rural banks, were constituted with the objective to serve all the farmers, especially to promote the rural areas. The primary goal was to reach the huge population, especially the poor in the rural areas, and promote the financial inclusion. Some other specialized banks were also set up to promote that activities that were required for the economy during the second phase of the banking sector evolution. If you take an example, the NABARD was established in 1982 to provide agricultural related loans. Similarly, the Exim Bank, export and import banks were built in 1982 for the promotion of the balance of payments and to increase the exports and imports. And National Housing Bank was set up in 1988 for the housing sector because that is one of the development bank which was emerged to provide the housing development, to promote housing development through providing a large chunk of loans. And the SIDBI, Small Industries Development Bank of India, was also established in 1990 for the promotion of small scale and medium scale industries. So in this way, the a bank has emerged over a period of time. And we all know in post 1991, the new economic policy was taken place. Then banking sector is one of the prominent sector under the service sector operations. In it reaches the very big growth in India. Now we'll see what is the banking market size. The Indian banking system consists of 18 public sector banks, 22 private sector banks, 46 foreign banks, 53 regional rural banks, 1,542 urban cooperative banks, and 94,384 rural cooperative banks as of September 2019. It was a very recent data which was captured to see the significance of the banking sector. During the financial year 2007 to 2019, the deposits grew at a CAGR of 11.11% and reached US dollar 1.86 trillion by the financial year 2019. Deposits as on February 2020 stood at rupees 132.35 lakh crores. It was a huge market size the banking sector contains. A total equity funding of microfinance sector grew at the rate of 42 year on year to rupees 14,206 crores in 2018 and 2019. What are the key investments and developments in India's banking industry, which include? There are many developments which taken place to promote the investments from the government policies, like the deposits under Pradhan Mantri Jan Dhan Yojana scheme and the old age pension schemes, which is given by the various public sector bank. And the private sector bank also, they started engaging into promoting this kind of the social security measures. And these are all the investments and social security measures which was given by the banks. Then we'll also have the government initiatives to promote the sector. As per the Union Government 2019, the government has proposed a fully automated GST refund module and an electronic invoice system that will eliminate the need of a separate EV bill. And the Union Government Budget 2019-20, the government has proposed rupees 70 crores to the public sector bank. And we all know that Pradhan Mantri Jan Dhan Yojana scheme, which was introduced to promote the rural and urban women so that they can able to get the various government schemes, direct benefit schemes to that particular Jan Dhan accounts. Like this, there are so many achievements and the initiatives which was brought under the government and private banking sectors. Now we'll see what is the major functions of the bank. We have two major functions. One is primary functions of the bank and the secondary functions of the bank. The primary functions of the bank, such as saving deposits, fixed deposit, and accepting the current deposits and accepting the recurring deposits in terms of deposits. And they will also do granting of loans and advances to the people, which includes the overdraft facility, cash credits, loans, discounting of bill of exchange. In this matter, we are going to discuss elaborately what are the primary functions of the bank and the secondary bank functions of the bank in the next forthcoming sessions. Thank you.